Everybody hears me? Perfect. That was a lot to learn. We heard from Mark. Thank you very much for that, Mark. And we continue kind of in the way. We have Gen 5, my markets, and I have 3 wonderful colleagues with me and Uni on this side, who will speak about their markets. So basically speaking about my market. Declan already introduced them. To my left, Christina Lindenius, the CEO of our Swedish colleagues. To my right, Yong Shin, the CEO of our Korean colleagues from life insurance market. To my very left, it's a great pleasure, the president of the Mexican Insurance Association, but not only that, Recaredo is all our president in the Global Federation of Insurance Associations. And as I see the clock ticking right in front of me, I give the word to Christina to start off. Thank you so much. Christina, the floor is yours.
Thank you very much, Florian. And first of all, thank you very much for giving the opportunity to me to share with you some aspects of the market I represent, the Swedish market. Let me start on a positive and somewhat bold note. From several perspectives, the Swedish market is already far ahead in dealing with some of the trends and challenges that are shaping the insurance market and the insurance industry in the years to come. Firstly, the protection of individuals is already well developed in the Swedish society. The protection given by our public welfare system is complemented by income insurance and pension schemes collectively agreed by the partners in the labor market, and thus covering more than 90% of the workforce. And then, of course, we have a good coverage of additional private insurance. Secondly, the Swedish society is highly digitalized, and so is the insurance sector, with a high degree of digitalization all through the value chain, which ensure an efficient handling of claims, lower costs, and creates the possibility of an efficient communication and interactions with clients. Thirdly, transparency is also developing in the right direction, in the sense that information to individuals and customers is now more easy to understand and based on quality, rather than being too technical and based on quantity. All this, of course, facilitated by the digitalization. But having said this, Florian, of course, we have challenges to overcome. The Swedish public welfare system is under pressure, as many others in Europe and worldwide, due to demographic challenges. As we all know, the baby boom generation is quickly approaching retirement age, and the old age dependency ratio will almost double until 2060 in European countries, as you see on the slide just behind me. Adding to this, already exceptionally low interest rate, now expected to remain for some time in the future, and expectation on lower returns on stocks in the future will of course affect the insurance industry and future pensions. However, in the Swedish case, and seen in retrospective, bold action was taken already at a very early stage to meet some of these challenges. Let me give you a little bit of a background when it comes to demographics. Already in the mid-1980s, it was clear that the Swedish pension system at that time was not sustainable in the long run. And so a parliamentary commission was appointed to find solution. And after years and years of negotiations, in 1999, a reformed and financially stable pension system was introduced. And we left a pension system characterized by defined benefit and introduced a Pillar 1 system based on defined contributions and the life income principle. The same fundamental changes were thereafter undertaken by the partners in the labor market in the Pillar 2 pension system, the occupational pension schemes. This shift was absolutely necessary, but of course not an uncomplicated task, with some remaining challenges for the future. As you know, in a defined contribution system, the risk of future pension outcome is borne by the individual and influenced by all the choices and decisions an individual makes throughout its life. When to start work, to work full-time or part-time, when to retire, what kind of investment decisions to make. Adding to that, since the inception of this new pension system, average life expectancy in Sweden has increased quicker than the average age of retirement. And now, due to these factors, there is an intense discussion in Sweden on what we could call a pension gap. People are hoping and expecting for higher pension than the new pension scheme actually, for some, will deliver. Not at all for everyone, but for some. And furthermore, the increased risk and responsibility that rest with an individual raises the importance of transparent and adequate pension information to citizens and customers to enable them to make informed choices. But we all know that people seem sometimes to be a bit short-sighted. There is financial illiteracy, and people are not always that interested in pension issues and financial products. So there is a risk of an information gap. And I would like to, later in the panel, to come back to how we are trying to tackle what I call the pension gap and in the information gap. And in many aspects, Florian, the insurance industry is part of the solution.
That sounds very promising. Thank you so much, Christina, for the first presentation. If I may ask you for we agreed that we call it the click thing.
The click thing, we go like that.
Yong, floor is yours. Some insight into Korea. The green button starts off your, there you go.
Good morning, Florian. Thank you for your kind introduction. It's my honor to have this opportunity to deliberate on many exciting topics and share insights at this forum titled Insurance 2030. I will briefly introduce the status quo of the Korean insurance industry and major challenges facing us. According to the 2019 Sigma released by Swedish, the Korean insurance industry ranked 7th in the global insurance market in terms of annual premiums written in 2018, with insurance penetration ranking the 5th and the insurance density is the 17th. Likewise, we have achieved remarkable growth amid the rapid advancement of the domestic financial industry. Nevertheless, we are facing many challenges to seek a new driving force, as well as to develop strategies to adapt to a rapidly evolving landscape. As the domestic insurance market has already come to maturity, with the insurance purchase rate per household reaching 98.4% as of 2018. We have 24 life insurers and 17 non-life insurers, and the 5 major players hold most of the market, 60 to 70%. The product of life insurance are composed of whole life, annuity, retirement pension, and variables. Life players are suffering negative growth in premium since 2017 and declining profitability. In case of non-life insurance, the major product is a long-term insurance, 67%, which is quasi-life, as it is composed of annuity and sickness insurance. The premium income of traditional non-life product, i.e. motor, and casualty is less than 1/3. In addition, the insurance sector accounts for 9.6% of the total assets of the entire financial industry, playing a pivotal role in the Korean financial market. Lastly, I'd like to talk about some difficulties and challenges, including the introduction of the new insurance accounting standards amid a super low interest rate environment, one of the biggest issues facing us. First of all, if you look at the yield trend of the 10-year government bond on top, you can see that interest rate has been declining for the last 20 years across the world. Korea in particular has experienced a relatively sharp drop in yield compared to other major countries in Europe. Furthermore, as the US has currently cut its base rate, an additional rate cut would take place by the end of this year in Korea also. Under this global super low interest rate, IFRS 17 is set to be introduced in 2022. Korean life insurers are struggling to ensure a soft landing of the standard, but more severe adversity lies ahead of the life insurance industry. Korean life players have a lot of policies with a high guarantee fixed rate and extremely long maturity, which was sold at the era of double-digit interest rate in the past. Moreover, as the ALM duration gap of the major life insurers is 5 to 7 years, it is very difficult to narrow the gap in a short period of time. That's why Korean life players are suffering negative interest rate margin, and their business structure would be vulnerable to this market consistent liability evaluation. Also, we are lacking a legal system in which insurers can improve the liability structure through the switch and transfer of a business. Due to such a legacy high guarantee fixed rate liabilities, Korean insurers cannot help but to continuously carry the burden of the increasing amount of policy reserves and of raising a large amount of capital for a long time. And those will hinder a smooth introduction of IFRS 17. Considering the aforementioned circumstances, home and abroad, comprehensively, the structural and the physical constraint stemming from the IFRS 17 in 2022 endangers the Korea's life insurance industry quite heavily. To overcome such challenges, we should come up with effective measures such as allowing more time for preparation to ensure stable introduction of the new system, which I would like to talk about later on.
Thank you very much, Shin. I'd like to invite Recaredo to present his market, and looking forward to hearing later from you how you tackle the challenge of the IRFS mismatch. Recaredo, please, the floor is yours.
Many thanks. It is a pleasure to be here. It is an honor. Congratulations for this very interesting and very challenging conference. And of course, I want to express my thanks to Anne Kelleher and Kevin Thompson for inviting me to attend here. And of course, Una and Florian, thank you very much, and thank you for your moderation. I will talk with regard of what is AMIS. I will not go in a deeply manner with regard of the Mexican insurance market, and afterwards I will talk with regard of what is GFIA. You are members of GFIA, and maybe it is good that you have the opportunity to know in a deeply manner what is GFIA. And I will finish with an overview of innovation and digitalization. The Mexican Insurance Association is the solely insurance association for the Mexican insurance market. We don't have a separation between life and non-life. It is the unique association. We are having 87 insurance companies in this association, and 89. And we represent around 99% of the Mexican insurance premiums. The goal of AMIS is to promote the development of the insurance market, even though we are a very big population country. We have almost around 100 million and 22 million people in Mexico, but we have a low level of penetration. We have 2.3% of the GDP penetration. It is the reverse side of your country, in which you have a low population and a big insurance penetration. But in any case, you can see that we face almost very similar challenges in all the insurance markets, and this is something that I have been learning throughout my years in GFIA. We have 6 strategic products. Recently, we have a new government in Mexico. It is a government, a populist leftist government, and then they have an agenda which is very populist oriented. And then our challenge has been to align our strategic plan. We do always a strategic plan for 5 years. We are finishing the 2020 Vision 2020 strategic plan, and we are moving now to our 2025 vision. And this plan has been aligned to the priorities of the governmental strategy. And of course, pensions, health, resilience for catastrophic events. In Mexico, we have around one tropical storm every week. Not very hard, all of them, but we have. Then we have to create resilience. As you know, we have big earthquakes. We have the collection of natural hazards in Mexico. Of course, we have high delinquency levels, and it is a shame, but one of our strategic goals has to be to improve the road safety and to diminish delinquency. Of course, agricultural and risk management are other of our priorities. Risk management, it is a big priority, can sound very simple, but we are pushing towards our government that they have to see that they have to have a private-public partnership in order to have a public policy for risk management of all the public goods. And then this should be something that can create big problems in the economy. Then not only the financial problems, then we have to deal with that. Now, what is GFIA? GFIA is the Global Federation of Insurance Association. It has been founded 7 years ago in Washington, but we were working maybe 4 or 5 years before as a network, because we share so many problems in common, as I said, in the insurance sector. Then we represent throughout 40 member associations and federations like Insurance Europe, or in the case of Latin America, FIDES, which groups 21 countries. Then we represent 64 countries, and their companies account for almost 89% of the insurance premiums worldwide. Then this is a very good representation. To increase the industry effectiveness, we are providing input to international regulatory bodies. I made a mistake, and I wanted to say AMIS has 17 committees and 50 working groups, and in the case of GFIA, We have 15 working groups that you can see there. And as you can see, we are dealing with the most challenging issues that we face as insurance industry. We don't have nowadays the EIF Arias committee because we don't have a common point of view with this regard, but this is another challenge. And those are the common industry challenges: the aging society, cyber risk, political environment, business environment, climate adaptation, and innovation. Innovation, this is something that we will be talking about in this conference. This is very important and very challenging. I can say, and I will talk in a deeply manner later, that, and believe me, because in some instances when I say that, so many people say that I am a little bit crazy, but I think, and I am sure, that in the next 10 years, the insurance industry will change more than it did in the last century. Then we are having very, very interesting times to come, and we have to see this as a great opportunity to grow and a great opportunity to learn and to deal with these challenges, with digital transformation, the customization, the data science, and we have to provide what the consumer needs and not what we want to provide to the customer, the automation and simplification of processes, and of course, it is very important to know better the customer, as we saw in the last keynote conference. Thank you. This is, at this moment, all.
Thank you very much, all three of you, for giving this insight. I guess we are all waiting for the solutions, but before we get there, I would like to ask each single one of you in a very quick statement, let's say 1 minute, 2 sentences, on how your market is exposed to what the others said, the problems the others raise. Yong, your market and innovation, 1 minute, 1 statement.
Yeah, our market is trying to develop healthcare service for the customers. But it's very difficult in Korea because of very tight personal information regulation. Nonetheless, we are trying to expand our service.
Thank you so much. Recaredo, Christina's topics, demographic, the baby boomers. What's the situation in Mexico? 1 minute, 1 shot.
Even though you can see that Mexico is a young people country, this is changing, and this is changing very rapidly. Then we are also facing the problem of the aging dependency. Then we are dealing with a pension system, as all the countries in the world, in one way and another, with the problem of to have a stronger 3-pillar system, and of course to improve in several ways the individual savings. And of course, taxation is very important here. And maybe we are proposing to our government something similar to the UK system in order to have a system of voluntary savings throughout the payroll. On the other hand, we did a research last year in which the only problem is not the pension. We have other problems, and one very important one is to provide health systems and to guarantee access to health to all the people. And on the other hand, elder people are facing more risks than younger population. Then we have to develop public policies and work together with the government to provide them with more resilience.
Thank you very much. Finally, the third topic. So we are on with the interest rates. I leave you off the IFRS 17 because at European level we have the same problem as GFIA is facing, no consistent position across all markets.
Let me start from another perspective altogether, saying that from now and then it's good to have a crisis, even in one's personal life actually. And the reason, of course, is that crisis of some kind, make you stronger. And so is the case actually also in the financial industry. And looking in the Swedish situation, starting with the banking side, we had a banking crisis in the 90s in Sweden, and that made banks learn to behave better. So when the financial crisis erupted some 10 years ago, all Swedish banks stood strong. 2001, 2002, there was a crisis in the life insurance industry. And in response to that, our supervisory authority implemented a supervisory tool that forced all the life insurance companies not only to market value the asset side, but also the technical liabilities, the insurance liabilities. So they adapted the products, the way of raising capital, their investment strategy to that new environment already during the first decade of 2000. So now, even though we have had negative central bank rates and extremely low long rates since 2015, our life insurance industry stands strong and actually produced a very good return, on average almost 8% during the last 10 years. They have more stocks, they have shorter maturity, but very safe bonds. They go into alternative investments, and they have now very good solvency, even though that we have had for long very low interest rates. So crisis now and then might be good.
Thank you very much, Christina. So the Swedes found their solution for low interest rate, it seems.
Well, we hope, though, it doesn't last forever for many reasons.
Getting a bit into a solution of the problems we heard before from the different markets, I'd like to hand back to Recaredo to follow up on what he said at the beginning around innovation. Please go ahead, Recaredo, and keep an eye on the time, please.
Yes, okay. With regard of innovation, I will talk very rapidly as Florian pushed me. With regard of Mexico, we have a very recent law of fintech and insurtech. And throughout this law, it is very interesting to see that we are helping the solution of sandboxes. We are permitting sandboxes for 2 years for fintech and for insurtech. Of course, when I am meaning insurtech, I am referring to insurtech carriers of risk, because on the other hand, all the insurtechs that provide solutions to customers and helps us with our processes are widely open. But it is very important that in all the jurisdictions we deal with this issue, because insurtechs will be a reality carrying risk, and if we don't create a proper regulatory environment, they will go by the freeway, and then it is very risky. And we have to help to create the disruptive model inside the insurance industry, and not to wait that Google and Amazon or all the technological companies will create the disruptive model for insurance, as happens with Uber and other things. On the other hand, we have very interesting initiatives in AMIS with blockchain. Unfortunately, Accenture lose and won IBM. And we have also artificial intelligence tools in order to detect frauds between all our companies. In the side of GFIA, we can say that we are working very hard with regard of cyber risks in 2 points of view. The first of it is with regard of how we can help the insurance companies to be resilient for cyber attacks, and in this part we have to share information with our authorities, and sharing information we will learn more and we will be better prepared in order to prevent some attacks. On the other hand, we are working, as you as companies can know, in the part of the development of products. The products comes alongside a big part of risk prevention and sharing of information, and of course loss control when an attack happens.
Thank you so much. Christina, you solved low interest rates, so what do you do about demographics?
Yeah, the pension gap and the information gap. Well, you know, the pension gap, some people expect lower pensions that they hope for. In fact, a lot of people in Sweden will end up with pension levels that amounts to 60 to 70% of their end salary, but still some will get somewhat lower. There is now an intense public debate, actually, and what will happen is that Parliament will there will be a bill in Parliament increasing the retirement age. And the retirement age will be linked to an automatic mechanism that connects the retirement age to the average expected life in Sweden. So the age for retirement will increase from 65 to roughly 68. So that is a strong measure, of course. Another efficient way, of course, to ensure sustainability in pension is to have a multi-pillar pension system. And in Sweden, we are now experiencing that there is a shift between the pillars. So the importance of occupational pensions, the second pillar, is increasing, especially so for middle and high income earners. And this development is likely to increase as the partners of the labor market, the social partners, have agreed to further increase the contributions paid for quite a large share of the workforce. So when it comes then to Pillar 3, there has actually been a somewhat disappointing development during the last few years, since in 2016, the government all of a sudden decided to abolish the tax incentives. So the third pillar pension market collapsed, of course. Given the current discussion on a pension gap, many politicians now regret that move, of course. And right now, Insurance Sweden is, of course, lobbying for introduction of a new third pillar system. But we will not aim for tax incentives, but rather for the government to match pension savings undertaken by individuals. That has proven to be more efficient, actually, to raise pension savings, especially for those with lower income. Then to come to the question of the information gap. Actually, already in 2004, the life insurance industry, together with the government, started to work on a common company to produce a website. We call that My Pension, in Swedish Min Pension. And it has developed magnificently well. It now covers all pension capital in Pillar 1, 2, and 3. So an individual can log into the site and get individual information on all 3 pillars, and very easily do pension forecasts to get an understanding on what will my retirement income be. And you can do it very easily. Simply do small clicks and you see what happens if you retire at 63 or 67. Almost 70%, 77.0 of the workforce has found already this website, and more are registering every year, and many people go there many times a year, to be quite honest. And next week, we will launch a retirement planning, digital one, to make it easy to actually plan for your actual retirement. You can work on different scenarios. What will happen if I take a lifelong payout, or for 10 years in different parts of the three-pillar system? And you can compare and contrast different alternatives. And then you decide which one to take. And then you get a to-do list that says this is what you have to do, and you have to be in contact with those pension providers to enact the payout. And we even have digital interface to the pension providers. So when you have your to-do list, you can interface directly to the website of the pension provider. So that is high tech. One of our first and most successful insurtech companies, I would say, and I'm proud to say, a daughter company to Insurance Sweden.
That sounds very good. And basically a one-stop shop for pensions.
Yeah.
Impressive.
Thanks.
Okay. Due to the order of our speakers, unfortunately, I have had my back to you for quite some time. So we heard about solutions. So what's your idea about IFRS interest rate? And how do you solve the problem?
See, maybe the best solution will be to raise interest rate up to, say, 10%. But we know that it's impossible. As I told you during the presentation, the Korean life insurance policy with a high guarantee fixed rate accounted for about 41%. Policy that offer fixed rate of 5% or above take up 26%, and 74% of those remaining period last 20 years or more. That's why it's very difficult for Korean life insurance players to introduce IFRS 17 in 2022. It's very difficult. And furthermore, we have no system like co-insurance and buyback option and runoff. So maybe in your jurisdiction, you have those kind of system. So I am asking our regulator to introduce those kind of system in Korea also. As I told you earlier, it's very difficult for Korean life insurers to overcome those kinds of issues, difficulties within a short period of time. That's why I'm insisting to allow us more time for the introduction of IFRS 17 because it's impossible to introduce the system in 2022 under this super low interest rate situation.
Thank you so much. I promised something to Recaredo, which I can't hold due to the time that I don't have you to sit too long in this room without your coffee break and to keep you away. Recaredo, Christina, and Yong will be here the full afternoon, right? And I would like to point to one question I got, and this will be taken off this room now because then it's not only about formal interaction. Is there a formal structure for the insurance bodies to connect constructively with regulators to support a proper functioning of the industry? The three people with me on this panel will stand ready to answer this question bilaterally. Unfortunately, it's posted by someone anonymous. As it's an anonymous person asking, maybe you can ask for the informal ways of interaction as well. For the moment, I would like to thank all three of you. I owe something to Recaredo. I will do my very best at the next GFIA event. And thank you so much for coming. Thank you so much for being with us today. And have a great day. Interact. Get to know the Irish companies.
Thank you very much, Florian.
Thank you.
Thank you.